A new way to invest in Bitcoin is making headlines, the Bitcoin ETF. But what exactly is it and why does it matter? Let's break it down. Okay, an ETF or exchange traded fund is a traditional financial product that tracks the price of an asset like gold, tech stocks, or Bitcoin. A Bitcoin ETF lets you gain exposure to Bitcoin's price without actually holding or managing the crypto yourself. Bitcoin ETF proposals began as early as 2013, but the US Securities and Exchange Commission rejected them for years over concerns about market manipulation and insufficient regulation. In 2021, a Bitcoin futures ETF was approved, but it didn't track the actual Bitcoin, only derivatives of Bitcoin. In that same year, Canada became the first country in the world to approve a spot Bitcoin ETF, but since Canada's capital market is relatively small, inflows into the ETF were modest. Then in January 2024, history was made. The SEC approved the first Bitcoin ETFs backed by real Bitcoin holdings. It quickly broke all the records for a new ETF launch in the US, amassing around $40 billion in net inflows in the first year, and now major players like BlackRock, Fidelity, Grayscale, and ARK Invest offer Bitcoin ETFs, bringing crypto exposure to traditional finance at scale. Now, Bitcoin ETFs might sound simple, but they do come with management fees, usually ranging from 0.2% to 1.5% annually. Some providers also charge spread costs or custody fees. Over time, these fees can chip away at your returns, especially if Bitcoin's price isn't moving much. When you hold a Bitcoin ETF, you're trusting the fund manager to secure and store the Bitcoin properly. If their systems fail or if they mismanage funds, you don't get a bailout like you do with banks in many countries. You're not holding Bitcoin, you're holding their promise. Also, you can't use a Bitcoin ETF. You can't send it, spend it, or use it in Bitcoin DeFi. ETFs are for price exposure, not utility. Bitcoin ETFs could bring billions more of institutional capital into the ecosystem. That's good for one aspect of adoption, but it also ties Bitcoin closer to traditional finance. And with that comes regulation, centralized custody, and new risks. So, should you invest in a Bitcoin ETF? Well, if you want simple exposure through your brokerage account, it's a convenient entry point. But if you care about self-custody, permissionless use, and real financial sovereignty, then owning Bitcoin directly is still unmatched. Want to hold real Bitcoin, not just a paper version? Download the Bitcoin.com wallet app and take control of your Bitcoin and crypto today.